The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Louis. We are a long way from our offices at 100 Broad Street in Philadelphia, Pennsylvania, at the offices of Duke & Duke. We are in paradise here at 618 Cleveland in Clearwater, Florida. The chair that I'm sitting in, folks, happens to be right off of one of Tom's yachts, and I've paid the price of actually riding in this chair as opposed to riding on the boat after the bonds hit 175. And now they're, I believe, on their way back down to 155, but we'll have to wait and see. The first chart that I've posted here to Tiger TV today is the one showing the stock market going back 34 years. August 9th of 1982 was the bottom of the stock market. I believe the Dow was right around 600 or 700 at that point, on its way to 18,000 and change that it made on Friday. And it looks like we're going to be a little bit higher today, but it's still nip and tuck. We do have some really interesting patterns in several different things today that we will go through as we proceed through the morning. But I wanted to cover what I think are some of the important things, because, you know, what we see in the news is not always is the way it should be reported. And that doesn't just mean the politics part, it means the market stuff also. If you'll remember, we've been watching the New York Stock Exchange index chart for a very long time. And if we take a look at that, you're going to be able to see that, you know, we are a long way from making a new high as of yet. And this is the one that is the real market, folks. This is 2,500 of the most popular, liquid, highly capitalized stocks in the world, including some foreign stocks. So it is really a good, broad indicator. We don't really have a tradable index for it. The index on this is basically used for calculating, you know, mutual fund and hedge funds and ETFs and things like that. But it is really what the real market is doing. The Dow Jones, on the other hand, has certainly made a new high. There's no question about that. And in fact, it is actually, you know, a marginal new high. You know, it hasn't really gone too much higher than what we've gone before. But, you know, everybody's talking about this, you know, monster breakout that we're having, and this is not really what's occurring. If we look at stocks, you know, that are in the Dow Jones and also in the S&P and in the NASDAQ, you're seeing it showing different pictures than what they're really telling us about as far as, you know, what the market is actually doing. For instance, we'll just take a quick look here at Microsoft. We had several requests here over the past weekend to take a look at Microsoft, and you'll notice this pattern that we've talked about many times, which is the 1, 2, 3, 4, 5 expanding triangle pattern. You'll notice that this pattern has hit Microsoft 2 times in the past, both times giving better than a 15% correction, and now we're seeing it for the 3rd time as of Friday's close, when we hit the 58 level in Microsoft. I don't believe we're going to see Microsoft above 59 or 60 in this move, and we could easily get a retracement down to the 49 level without any trouble at all, and that would just be a 50% retracement off the previous low that we made, you know, back in August. This is an interesting day today. August 15th was actually the first time I was ever on Tiger TV. It was in 2007. I happened to be in Las Vegas. I was using Skype, I believe, for the first week, and it went out that day on August 15th, and I was talking to Tom O'Brien on the phone. The Dow was down 350 points that day, and the Russell 2000 was actually up on the day. The NASDAQ was only down a few points, with the Dow being down 300 and some, and Tom on his program was screaming what a wonderful buy we were having in the market, and we did, and we went up from August 15th into October the 7th of that year, and then, of course, you know, we had a you know, better than 70% pullback on some, and NASDAQ went actually farther, but, you know, that was the beginning of the too big to fail problem. and all the other things that the people from our government are telling us what's really happening. And folks, just remember what people say and what people mean can be certainly different things in all walks of life, not just the financial part, but in all walks of life. So just try to think for yourself. You know, that's basically what you got to try to do, and read between the lines on some of this stuff, because what you hear and what you read might not actually be what's happening. And that's true in the financial markets. That's why, you know, being a technician, you do have some real advantages, because you're only looking at the price action. If there's more buyers, prices are going to go up. If there's more sellers, prices are going down. We've seen this over and over in the markets, you know, through the years, to tell us that that's, you know, really, you know, what's happening as things are occurring. Now, one of the other stocks that we wanted to be looking at is IBM, and if you'll give me a second here, I will get it up here. Hopefully, and this is one of those. It maybe the hope is not going to be the way it is, but I'll pull it up at the break to let us look at. I do want to talk a little bit about money, and that we'll do that by using the U.S. dollar index. We'll take a look at this. As you can see here in the dollar index, we've completed. There were actually 5 ratios up here. I missed 2 of them from May and also from June. I covered those in the newsletter, but on this one I didn't have them put in time. But there are actually 5 ratios up here at this 97.50 level in the dollar index. This is a very, very powerful cycle, folks. This tells us that the dollar could be under some pressure. And when you stop and think that the euro is 53% of the dollar index, this means the euro could actually, you know, move a little bit higher. And I believe it could get up to that 114 level, which is not a big deal from where it is, but that's a good, you know, 3%, which for a dollar move is quite a bit. That's well over $3,000. But as we said today, it looks like the dollar has the ability to sell off a little bit more, all the way down. As you can see the line there, which is the 78.6 retracement, that would be a beautiful pattern there, because you'd have a 135 pattern with your lowest low in April, your second lowest low on the Brexit thing on June 24th, and then we would have another one coming in later this month, right around about a week from today. So that would be another one you want to be watching around August the 22nd. Remember, this is the week of the full moon. I believe it comes in on the 18th. Also, if you remember that we have to send out birthday wishes to President Clinton, ex-President Clinton. He will be, his birthday will be on August the 19th, and you're asking yourself the question, how in the world would I know that? I have my lovely firstborn child. Jill was born on August the 19th, and that's the only relationship I had with the Clintons, was the fact that Bill was born on the same day that my daughter was born. So anyway, that's neither here nor there. We'll move on to the next charts as we go through. One of the things that people are telling us is that the world is really turned around, and that the emerging markets, you know, are leading the market higher. Folks, take a look at this chart that I'm going to post into Tiger TV now, so you can see the fact that this thing has been in such a down move for so many, and this is just going back, you know, to 2012. Hold on one second, and we'll be moving back a little bit after the break.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we have a caller from Hartford, Connecticut. Bob, are you there?
Yes, I sure am, Larry. Good morning, Larry.
Good morning to you. What can I do for you?
I had a question about the Dow theory and if it's given any recent signals that you're aware of. And and then I have another question.
Go ahead. Let's do both of them, and then I'll answer them both. How's that?
That sounds great. The second question has to do with, now I just forgot the name of it.
Welcome to the club, Buckaroo.
I'm having a senior moment. Come back to me and I'll get to that second
Okay,
question.
let's do the Dow theory. That was started by Robert Ray many years ago, and it was very, very popular for a very, very long time. And basically it means that the Dow Jones, the transportations, and the utilities should all move together if you're in a booming economy. Well, we've already topped in the utilities about 4 or 5 weeks ago, and at that 1.618 expansion, and the Dow Jones Transportations topped 2 years ago. And it's been in a steady downtrend with lower highs and lower lows. So this is certainly a non-confirmation of the Dow. But frankly, Bob, very few people actually follow it anymore. My good friend Arch Crawford, who lives in Tucson, just about a mile away from me, follows it very, very closely, and a few other folks. But after the gentleman from, but here I'm having another, between the two of us, we're having two senior moments. But the fellow in Kansas City, my good friend, and I, doggone it, I can't remember, Joel Granville, he was very big with that. And then Joe passed away about 3 years ago. So there's not too many aficionados of the Dow theory around, and people basically, they don't pay any attention to it. And when you look at CNBC and you look at other store like Bloomberg and stuff, you're seeing these people that are, on the tube that are, like Art Cashin always says, don't trust anybody on this program that's not able to shave yet, and he said that includes the boys and the girls. So, most of these people are very, very young, and they don't have much experience, and they certainly don't have any skin in the game. And that's the big difference. But I still think the theory means something, but frankly, we have so many vehicles to trade now. My goodness, years ago, there were 1,600 issues on the stock exchange when I first started trading in 1959, and now there's thousands of them. So, I don't really know if it means much anymore.
Okay, and then is it the McClellan Index?
Yeah.
Tracks the that one with you.
Yeah, as a matter of fact, I got an email from Tom McClellan, that's Sherman McClellan's son. I knew Sherman and Charlene when they were trading out of the Conti office back in the early 70s, and I'm hoping to have Tom on the show to talk about that index. He does a really great job following his dad's footsteps. And, it's a very, very good oscillator to use with the market. And, he's saying that, we're over some real critical times in here, but the market could easily work higher, which it certainly could. Nothing has stopped this thing. So, whenever the top is going to come, it's going to come. And when it comes, I believe, Bob, you're going to see something very, very dramatic, because it's got to scare some people. We have a volatility index that is lower than it was in 2008 when, our banks were going under. So there is absolutely no fear in the market at all now, at a time when I think there should be some fear just from being at these lofty levels. And we're the only stock market in the world that's at these levels. Everybody else is in a major bear market.
I meant Bradley Index, so the other Irish index.
Yes, okay. Yeah, the Bradley model, it should have turned down on July the 5th. Now, the actual top in the stock market so far has been July 15th. That's based on the New York Stock Exchange Index. But actually, this past week, on the 2nd, when we had the new moon, we made a very, very slightly higher high in that the New York Stock Exchange Index, but we've always closed below it. We've always been closing below that 18,019 level, which Tom O'Brien pointed out 3.5 weeks ago. So I think that's where we closed on Friday, right at that level. So nothing has really happened, and we've got a lot of cycle stuff coming in this week, Monday and Tuesday, as was brought to our attention by our good friend Norm Winsky from Astro Trends. So all of these things are telling us that we should be at a real critical week this week. But the main thing is that, this thing broke into new high ground. There was no volume at all. I mean, volume is what the engine that makes this thing go higher. And there's so many negative things out there technically. When you look at the price action, you look at the volume, it's a very scary situation that everybody's on one side of the market, and yet the market doesn't want to go down. So there's going to be an outlier event, in my opinion, that's going to come up, and that'll make it, make everybody realize that something really big has happened.
Thank you so much, Larry.
Bob,
you're the best.
Thank you for calling in. I appreciate the good words, and the check is in the mail, my friend. Okay.
Bye-bye.
You bet. All right, we had a question about the emerging market stock index that I put, and the question that someone brought to our attention was that there was a head and shoulders pattern on this particular chart. And as you can see, if you look at this from the July of last year to January of this year to July of this year, there is definitely a head and shoulders pattern forming there that has been completed. And the first objective should be right where we are right now. And as you can look at this, if you like the Gartley pattern, you're looking at a perfect Gartley pattern and a 61% retracement of the high we made last year. And if you want to see a beautiful head and shoulders pattern, just look a little more closely at this chart, because we focused on this last year when we were in the March period, because there was a perfect head and shoulders pattern. You can see it by the circles that are on the chart, and each of those was absolutely perfect. And the way you measure the head and shoulders pattern is they both have to be perfect Fibonacci numbers. In other words, from the shoulder to the head should either be a 1.27 or 1.618 expansion, and from the head to the right shoulder should either be 618 or 786. And when you have that, then you have a mathematical relationship that allows you to say that, yes, this is in fact a perfectly symmetrical head and shoulders pattern, and that's what we try to find, you know, when we're looking at these. Well, it's not just the emerging markets that give me some trouble as far as what's happening in the rest of the world. They're telling us that everything is wonderful in China, and this is just going back over the last 18 months, folks, and we just made a 382 retracement of the high from the 2015. Remember, this market topped in 2012, you know, 5 years ago, or 4.5 years ago. So this is a really nothing more than an ABC correction. It's our first really good ABC correction since we had the one in 2015. And this is a minor one because it's taken 7 months just to get to the 382 level, and it had to struggle to do that. So this is another indication that there's not a lot of buying happening in China. If this market were really strong, you'd see some really strong up-thrusting moves, and that would give you a spot, you know, to say, yes, maybe we are breaking out to the upside, but there is not a chance in a snowball coming out of the sky that this thing is in a bull market yet. I mean, we've got nothing but, you know, lower tops and lower bottoms for a long time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've posted the chart of the volatility index into the Tiger Den to let you take a look at it. This should be the one that scares you the most if you're long stocks. I mean, this is basically a way of looking at fear and greed in the market. And as you can see, there is absolutely zero fear. You can look and see where we were back in 2008. We were trading at around 14 or 15, and now we're trading, at 11, almost ready to break that level, which we will probably do early this morning. But we're at historically low levels, which means we're at historically high levels in stocks, and that is in fact what we're seeing. But we're seeing patterns that tell us that we're very, very close to what we think is a major turn in the market. In fact, this week, could be the week that we really see something really dramatic happening. I've had several questions about the horoscopes for the election stuff. Folks, as most of you know, I don't do that type of astrology. I rely on other people for that type of stuff, and I don't really follow it very much at all. But our good friends, Shane Smolian from wolftrader.net, Norm Winsky from AstroTrends, and Bill Meridians of Cycle Research out of Vienna, Austria, have some ideas, and they basically say that both of the candidates have very poor charts. But the one thing that they seem to agree on, that Bill Clinton's chart is the worst, that he has some really serious things happening in October in his chart. I don't know what that means, but let's just look at the history books when we get to October and see if anything really dramatic happened at this time in October. Whether that'll affect the elections or not, I don't know. The one thing I do know is that we live in one hell of a great country, and we're going to survive no matter what. It might be another 8 to 10 years before we get out of this quagmire of bad debt that we're in with these trillions of dollars that are being put on our grandchildren, but we will get out of it somehow. We always have, and we always will. And we always usually stick together. Might take a little more glue than we'd like to see, but we will make it through no matter what. Now, the one chart that I really want to show you today is one I really like. We've been following this with our good friend Mr. Z and also with Rich Anderson of Anderson Capital Management. This is the chart of the December gold, the Christmas gold that we've been watching for a very, very long time. And we are making what I believe is a major bottom here in the corn market. On Friday, we had a very negative corn report. The market was down for a matter of about a minute and a half before it reversed. And when you have very, very bad news in a market that has been going down, that means there is no more news that's going to make it go down. I mean, it's got all the bad news out of the way, and so there's going to be a buoyancy effect where it's going to rise of its own weight. However, if we look at the bottom of the chart, you'll notice that that final leg down hit an exact 1.618 expansion of the move from April into June. And that's the key level that we want to watch, of course, because if corn should go below 322, then that would tell us that this pattern has failed and we would be wrong and we'd have to move on, to the next chart. There is another one that I believe that you really need to take a look at today, and that is the NASDAQ chart, because we're looking at the same type of pattern, only upside down. You'll be seeing that we are very, very close, within just a few points of the NASDAQ matching its highs, not quite from 2000, because the highs in 2000 were at 4,900. That was on March the 24th of 2000. That was actually the 23rd, and then the market started down on that Monday, and that was the end of that. I remember that day so vividly that it was I was in San Francisco at a money show, and everybody was walking around with their P&S statements of how much everybody was making. It was the dot-com bubble. It was just amazing, and I was in an audience of about 300 people at the Stanford Hotel, and no one was listening to me. They were all talking back and forth, which is very tough when you're trying to give a speech, as Donald Trump knows if there's a crying baby. But anyway, I got up on the table. I jumped up on the table, very similar to this one. I started stomping my feet, and I said, ladies and gentlemen, I said, there's a train coming down the tracks at 1,000 miles an hour, and the whistles are blowing, and the lights are blowing, and nobody's listening. I said, pay attention to me for 15 minutes, and I started showing these same types of patterns that I'm seeing now that I saw then, and yet nobody paid any attention. The following Monday, it started down, and one person 2 weeks later called me, a nice lady from Monterey, California, thanking me for telling her about the market. And I said, were you able to get out? Oh, she said, no, I don't want to get out. She said, I'll just wait for another buying opportunity. Well, she probably got it in 2001 when it dropped, 87%. So we are very close to something like that just by looking at the whole thing with the VIX index and everything else. So try to protect your portfolios. I believe if we close below the lows of the last 2 weeks, which would be around 18,200 in the Dow Jones, that would be the first sign that the probable top is in, and we should have a very, very severe correction. Remember, we have some pretty smart people. Bill Meridian from Cycles Research and Shane Smolian from wolftrader.net have come up with some really good timing indications that we're coming into the October period, and September, October historically are our worst months. Statistically, that's been the case for 137 years. I think it's about a 70% chance that the market makes a lower low in September and October than it did in July. So we want to watch that also very closely. But remember, seasonals sometimes don't work. And, we can certainly be wrong at this. And any move above 18,700 in the Dow, that's 150 points from where we are right now, would say we're most probably going to go up another 3 to 5% before we top. But this is going to be a really difficult thing to do, in my opinion, because the volatility on this breakout has been very, very little. And so there's not much, going on as far as, what we're looking at as some of the things that are really occurring. So that's the main thing that we want to be watching right now. I would like to mention that in relationships to the U.S. dollar and oil, people have asked me this question several times, and I've looked at these charts, and I find a really hard time looking at the oil market. Let me just give you an example here, because if you look at oil here with the stock market on a long-term basis, this is a weekly chart, you'll notice here that we don't have very much of a correlation at all. You see a very tiny bit, during that April to June level. You certainly see that, but you don't see much of that at any other time. If you'll bear with me here 1 second, I need to turn off my monitor, or my alert monitor, because I am being filled in something, and I wanted to be sure that it's filled, and there it is, and I just have to turn it off, and I will be okay. So we're just making the, hold on 1 second, boys and girls. There, that'll turn it off. We just made the 1.618 expansion in the NASDAQ at 48.25. So we'll watch that a little bit closer. But we're getting back to that oil market. Now, if you go to a shorter time frame, and what we're going to do now is we're going to look at it just over the last year and a half, you're going to see something totally different. And that is, you're going to see that the oil market does have some pretty good correlation, with the S&P 500. But remember, this is a shorter time frame. And if you look at it over the past 6 or 8 weeks, the oil has been going down and stocks have been going up. So it doesn't always do that.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances.
Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and I've had a question about the euro. I've posted the euro chart into the Tiger Den, and as you can see, this is a daily chart going back over the past 9 months, and we made some higher bottoms in here. We made some higher highs. We made a really nice butterfly pattern, you know, way up there at that 115 level quite a while. Well, 116.25, you know, way back in early May. And then we've had the pullback that was a perfect ABCD pattern at the 61% retracement at 109. And since that time, over the past 10 weeks, we've been rallying making higher highs and, of course, higher bottoms, which is a good sign, which tells us that we could be looking at a little bit more of a retracement in the U.S. dollar. Remember now that the dollar index is 53% of the value of the euro. So, in other words, the euro is 53% the value of the dollar index. But you're also looking at the Japanese yen and the British pound, Canadian dollar, Australian dollar. Those are the largest of the big six that you're looking at. And the yen is, you know, moving very dramatically at different times, rising and falling. But the pound has been under a great deal of pressure ever since the Brexit vote, where it went from, 150 all the way down to 127 and change. And we're heading towards that 127 level. Once again, as the pound is under a great deal of pressure here today. So when you're looking at the dollar index, you've got to basically look at the big six, because if you don't, you're only getting a partial picture, and you have to trade each one of them separately. Each one is a separate cross rate, and that's the beauty of the foreign exchange markets, is it gives you so many different things to trade, and it's many thousands and thousands of times bigger than the stock and bond markets. The volatility is unprecedented. not only that, but the liquidity is also fabulous. So, you know, if you have trouble with your portfolio trading stocks, take a look at foreign exchange. That's where the real action is, and I think that's the best way to look at it. So far, the euro is up about 35 pips on the day, which is, you know, basically nothing. The average range on it is about 70 pips, equivalent to about $800 a day, which if you look at that compared to the S&P 500 E-mini, you know, how many times have we seen a 15-point move in the S&P E-mini recently? It's been in a tight trading range, tighter than ever. Never in history has it been this way. Also, if you remember the very first chart that I posted in here, the fact that we were 34 years up from our low in 1982, I could spend a half hour just on my memories of 1982 and that bottom on August the 9th, because I had just gone to the floor of the exchange at that time. The S&P was trading at 103, folks. Can you believe that? And look where it is now. It's trading at 21 and change. So you can imagine, you know, the move that that's had over all these years. So we've been in an unprecedented bull market for 34 years. The question is when is it going to turn down and have a pretty substantial bear market? I'm not just talking about one that's going to be 1 or 2 years. It's going to be something that's probably on the order of what we had during 1974 through 1983, where the market basically went up and down for 9 years with very, very minimal returns. And that could happen again. So remember that these markets don't always go straight up. I mean, some of them do. Remember, the leader of this bull market has been the biotech index, and the biotech index is far, far below its highs. It's barely making retracements. I mean, it's just been a spot where, you know, very few people have been able to, make any ideas of what's happening with biotech. I know there's certain stocks that have been hit hard with it, but not the whole index. But it has been very, very weak. And also, if we look at the banking index, the banking index is another one that looks relatively weak compared to everything else. And I think this is the one that I really believe that we've talked about several times, and this is a weekly chart, and we talked about this 3.5 weeks ago when it was making its top. You can see the Dow Jones Utility, again, making that 1.618 expansion number that we've seen so far today, just in the NASDAQ and the corn. It's just an amazing number, because once the market expands beyond that number, it can certainly, go much, much higher. There's no question about that. But right now, this is telling us that the bond market and the utility markets are going lower, which means you're going to be looking at higher interest rates from this level. How could this happen? I don't know, but you remember that this is nothing more than a giant experiment that they've been working on all these years. And if we look at this chart of the Dow Jones, the U.S. Treasury notes, those are the 10 and 20-year notes, you'll notice that this market has barely made a new high, 2 months ago, and we've been in a basic downtrend ever since. We started making some lower highs over the past several weeks. That's another indication that rates should be, going higher, and that's against what they're telling us. Remember, over 1/3 of the free world has negative interest rates on their shorter-term rates. We're the only country where we have positive rates all across the board. No one else has that. The next one that's even close to that, I believe, is Switzerland. I've posted that chart in here before, showing you that over 1/3 of these countries still have negative interest rates. And we're talking about countries like Portugal and Spain. And, they were nearly in default when the Greek thing was going on just a couple of years ago. So people are no longer concerned on the safety of their money. They want a return on their money. And that's the exact opposite of what Bernard Baruch talked about in his book, his autobiography, My Own Story from the 1930s, that don't be concerned on the return on your money. Be concerned on the return of your money. Make sure you get your money back, because then you have something to work with. I mean, I can remember the story that on an elevator with Mark Douglas once in Chicago, I met the great baseball player Ernie Banks. And he didn't know me, but he said, "Do you have children?" And I said, "Yes." He said, "Do you loan money to your children?" And I said, "No." I said, "I give money to my children." I said, "Why would I ever expect it back?" And he put his arm around me and he said, "You finally got this right." And he was with one of the great basketball players of the Chicago Bulls at the time, Bob Love. And Bob Love was trying to loan money to his kids, and Ernie was telling me, he said, "You're never going to get back, why do you even bother thinking about it? So remember, be concerned on the return of your money. That's the main thing that you want to be aware of, especially during these times when you have mortgage rates. I saw a mortgage rate advertised on TV on one of these loan companies, that web-based lending companies, of 2.9% for a 15% mortgage, and 30% mortgage at 3.3%. Folks, I can remember paying 11% many years ago, back in the early 70s, and was lucky to get it at that price. So things will change, but be careful in here, because these bonds have a tendency that when they run, they can get very, very scary. And this is a giant experiment. Nobody knows, including the Federal Reserve, what's going to happen, when this money starts to come back to roost. Whether that'll be now or the next day, we'll have to be able to see what's going on, with some of these things. Okay, we've had a question about the price of Apple. I'm going to bring that up here and try to bring you up to date on Apple, if I can only find it. And I'm I found it very quickly this time. Gee, I'm learning. This is a lot of pressure here, sitting in the captain's chair, trying to do the show live with a clean shirt, which is very unusual for a Monday morning. Okay, we'll take a break here. Oh, boy.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I've posted a chart of Apple Computer. As you can see, this 109 level is a 78% retracement of the high that we made, back in March. I don't think you can call this an uptrend because we've made lower tops and lower bottoms for the past year. Anybody that bought this stock last year at any time other than the bottoms that we made in August and January have losses in it. But we'll see if this is going to be it or not. We did make notice here that we hit the exact 1.618 expansion in that NASDAQ that we talked about at the start of the show. That was at 48.27, so keep an eye on that. If we get much above 48.47, it most probably is going to go, a great deal higher would be my guess, and you'd have to stand aside. Now, we need to talk a little bit about the gold market because this market has been starting to roll over. As you can see here by looking at this 4-hour chart, we basically have a situation where we've had a pretty good double top. The top in the silver was only a 78% retracement of that secondary top, which we know also is very bearish. So that gives a price objective of $18 an ounce in silver, and in gold a potential buying area at $12.75. And folks, at $12.75, you want to go over to the St. John Bosco's orphanage for widows and children and load up the proverbial church's hearse to get the gold, as much gold as you can, because I would love to buy gold at $12.75. I really think that would be the second ABCD correction that we had. The last one we had was at $12.02. That took us $150 higher, actually $170 higher, up to the $13.78 level. So we really need to watch this level at the $1,275 level. If we get to that level, it'll be a 61% retracement of the low from June, and it will also be a 38% correction from the low that we made in December when we were making the 3 drives to a bottom in gold when we were trading at 1,030. That's it. Live every day in an attitude of gratitude, and may God bless. Is that it?
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.